Beneath Beijing's glossy headlines and growth figures, China's economy is in serious trouble. Factories are cutting hours, investors are fleeing, and exports are plummeting. Trump's tariffs are delivering a brutal blow to China's once dominant manufacturing machine. From youth unemployment to tech struggles and real estate collapse, every sector is feeling the heat. And it's all starting to unravel at the Canton Fair. The 135th Canton Fair, once the crown jewel of Asia's trade expos, kicked off on April 15, 2025. But Trump's 245% tariffs on Chinese goods have left their mark. US and EU buyers who used to flock to the fair are now pulling back, choosing to buy from markets like Vietnam and Thailand, where the tariffs aren't so punishing. Chinese vendors at the event reported a 30 to 35% drop in orders compared to past years, signaling the heavy toll the tariffs are taking. Even state media admitted that order volumes were subdued, reflecting the broader economic malaise caused by Trump's aggressive tariffs. China's exports to the U.S. have taken a massive hit. In just the first quarter of 2025, exports dropped by $33.8 billion, largely due to Trump's tariffs. Major export staples like electronics, textiles, and machinery saw a dramatic decline. The port of Ningbo Zhoushan, one of the world's busiest shipping hubs, reported a 41% drop in U.S.-bound containers. The WTO predicts that China's exports to the U.S. will plummet by 77% in 2025 because of these tariffs. This is leaving China's manufacturing sector isolated from its largest customer. Trump's tariffs are forcing U.S. companies to rethink their operations in China. The American Chamber of Commerce reports that 42% of U.S. firms are planning to relocate production in 2025. Companies like Foxconn, Nike, and even Tesla can no longer afford to keep large-scale operations in China. Instead, they're shifting production to places like Vietnam, India, and Mexico, where tariffs are lower and trade deals are better. Even Germany's BASF paused a $10 billion investment in China, all because of the uncertainty caused by the tariffs. China's labor market is under immense pressure, especially among the youth. Youth unemployment surged to 16.5% in April 2025, with the real numbers likely much higher. The slowdown in manufacturing and the decrease in export opportunities have left millions of young workers without job prospects. China's education system keeps churning out millions of graduates, 11.7 million every year, but the job market can't absorb them. Many young people are now turning to the informal economy, where conditions are poor and opportunities are scarce. The tariff crisis has made the situation even worse. Despite a small rise in overall manufacturing output, China's factory sector is still struggling. The Caixin Manufacturing PMI showed a slight uptick to 51.2 in March 2025, but the new export orders sub-index showed a decline, meaning demand is still weak. Smaller factories in particular are facing tough times as rising costs and shrinking U.S. orders push them to the brink. Key players like Foxconn are scaling back their operations in China and moving production to Southeast Asia, where it's cheaper to operate. China's manufacturing might is weakening, and the global shift away from Chinese factories is picking up pace. To fight the economic fallout from Trump's tariffs, China's central bank has been pumping money into the economy, trying to stabilize the yuan. But despite massive currency reserves and $48.6 billion in U.S. Treasury sales in Q1 2025, the yuan has kept sliding. It hit a 19-month low, standing at 7.327 per USD. The tariffs have widened the trade deficit, and the gap in interest rates between the U.S. Federal Reserve and China's PBOC makes the yuan even less appealing to foreign investors. China's stock market is also reeling, with foreign outflows accelerating. Confidence in the yuan and in China's economy is slipping fast. Trump's tariffs aren't the only thing hurting China's tech sector. The ongoing chip sanctions have cut off critical access to high-end semiconductors for major Chinese companies like Alibaba Cloud, Tencent, and Huawei. With restrictions on key technologies, especially those used in AI and advanced computing, Chinese firms have been left in the dust. Investment in AI has dropped by 43%, and R&D budgets are being slashed. The tariffs have made it harder for China to keep up with global tech giants like Intel and Nvidia, pushing them further out of the global tech race. China's stock market has taken a massive hit, reflecting the broader economic pain. The Shanghai Composite Index fell by 11.8% in 2025, and foreign outflows have been accelerating, with $25.6 billion leaving in just Q1 alone. Investors are pulling out due to fears of long-term instability and supply chain disruptions. Efforts to restore confidence, including state-backed interventions and short-selling bans, have failed. China's stock market is in serious trouble, and investors are losing faith in the country's economic future. The Chinese real estate sector is still in freefall. Housing sales have dropped by 22%, and land sale revenues are down by 33%. This is only making the already fragile property market even more unstable. The high tariffs have reduced demand for construction materials and luxury real estate as overseas investors shy away from China due to economic uncertainty. Major developers like Evergrande and Country Garden, already drowning in debt, are now facing a $300 billion financial shortfall. There's no hope for a quick recovery. China's local governments are drowning in debt, and Trump's tariffs have made things worse by gutting revenue sources. Land sales and business taxes are way down, pushing local debt to 12 trillion yen, or $1.66 trillion. Even after a 6 trillion yen bailout from Beijing, experts like Fitch warn the situation is unsustainable. Key services like healthcare and infrastructure are already feeling the squeeze, and the long-term outlook is bleak. With its economy under severe strain, China might not stay quiet for long. A more aggressive trade stance through counter-tariffs, currency moves, or supply chain disruptions could be next. What do you think? Will China strike back or fold under pressure? Drop your thoughts in the comments, and don't forget to like, share, and subscribe for more sharp geopolitical breakdowns.